Oh, whoa, whoa, whoa. Good morning. Good morning. Happy Monday. Happy Monday. Happy Monday. I hope you guys had a great weekend. Hi, I am Grady Powers, and I am Grady on the charts. I hope you guys, again, had a great weekend. Welcome back. Here's Monday. Monday, even today for me is a little bit rough. I spent the weekend back testing my strategy and back testing my trading strategy, and you could tell by the look on my face that it was brutal. It was brutal. Did anybody tell you guys that back testing feels like trading? It doesn't really feel great. You know what I'm saying? Paper trading is different, but back testing your strategy and putting yourself in the proper position to be successful and getting the reps in and all of this and all of that. It's like training. It's like preseason training for football. That's what it felt like. If you guys ever, here in Texas, the kids get out in the field in the heat and they start working out then. Uh, yeah, so it's yeah, so you have to break your mind out of that malaise of foolishness, the malaise of foolishness. So the crazy part is I was doing pretty well before I started live streaming. But I think that the not the pressure of live streaming. I don't think I want to call it pressure, but I think just the focus and the awareness that trading on live on YouTube brings to trading, that sort of intensity. It kind of it I don't know, how would you, it's like a stress test, right? Every system and plan works until you put it under stress. And if it doesn't work under stress, then it doesn't work, right? So yeah, we spent the weekend back testing. Let's see if we can find some news to talk about. This week, there's nothing today. Today is Monday, May the 19th. Tuesday, May 20th, there's nothing. Wednesday, there isn't anything. Existing home sales is on Thursday. Friday is retail sales. So it seems to be quiet economically. However, sometimes we'll see more traditional, more average, but decent sized moves on the days where there's no real strong economic data. You would imagine that we would consolidate during these days, but a lot of times that isn't the case. Let's see what we have. Go ahead, kind of get started here. Excuse me. Yeah, I'm trying to shake the cobwebs out. I've been sitting in here silently droning over the markets, attempting to uh, disqualify a lot of my incorrect beliefs about my trading system. Trying to just qualify them as much as I possibly can. What I did see was some very interesting um, confluences of the trading ranges of the sessions. And so this is not a change of strategy. This is still ICT, right? And so yeah, that and then I made a video this weekend that I haven't even checked to see if anybody watched because I didn't really make it for a purpose of watching, which is you would think, okay, yeah, but this is YouTube, we should be watching. It's 9:28 a.m. Let's focus on this, and then we'll talk about that in just a second. So in 2 minutes, the market's gonna open. Um, when I did my back testing on the 15-minute chart, and it sounds a little bit odd, but I did it on a 15-minute chart, and I did it accelerated because, excuse me, um, one of the things about the lower time frame that we see is that there's so much activity that the entries occur and they happen rapidly, right? You could dial in and you're looking at the screen and that particular entry level that you had been looking for, it appears and then it disappears. But on the 15-minute chart, I wanted to really dial in what the 15-minute chart would look like prior to where I would be looking for my entry because I want to have a proper stop loss that would encompass the range of the 15-minute chart, at the same time giving me the ability to enter on a lower time frame, such as the 1 minute, 2 minute, or the 5 minute. Um, and so I wanted to just go ahead and open up the field, look at the higher time frames, see the way that the market was reacting at these particular levels, and then see if we can get ourselves involved that way. Today is a Monday. Monday, statistically and traditionally, for a lot of people, is a very bad day to trade, right? It's a very bad day to trade. Just prior to markets open, just prior to me starting up the live stream, I just took a little bit of time to journal just a bit to get my thoughts in alignment. And I was really surprised that with all of the stuff that we did during our back testing on the weekend, which was a very hard thing to get started. It was very difficult to get started on it this weekend. Um, and if you know, it's just sometimes you don't want to see your errors, right? You don't want to see your issues just out there in your face. 15-minute chart is rallying. I have a 15-second here. I'm just going to pull up the 15 because I want to see it. Where's my eye going to now? My eye is going to this up close candle because this up close candle is in alignment with the consequent encroachment of this level. And I'm also looking above the consequent encroachment of the Asian session towards the Asian session high. This is last night's Asian session high. I'm going to pull that forward just a little bit. And I am looking to see whether or not we break the London high and run for liquidity above the Asian session high. There's an imbalance here. It's a possible area that we could target. We closed here on Friday. We opened here on we opened here on Sunday, and then our Monday open is here. So there's a gap here between Friday and Monday, which is roughly the size of the Asian session. It's very, very close. So this would represent a 50% retracement between the gap on Friday and the gap today. So watching the regular trading hours to see if we'll see if we're offered a first presented fair value gap. Hmm. And again, as soon as I turn the mic on, I start yawning. It's like I don't know if you guys ever watched Jay Giggs. He's a streamer. Excuse me. He's a YouTube streamer, but his game is Raid Shadow Legends. And one of the funny things about him is every time he begins to stream or record a video or whatever, this is not paid. This is not a paid average ad or whatever. He's just a funny dude. He sneezes. He sneezes as soon as he hits the button. The first thing he does is he says his little intro and then he sneezes. And as it reminds me of me and yawning. It's like something about the mic, something about just speaking into the mic or whatever. I just there's been a lot said about whether or not we're going to have a pullback at this point. And we opened lower, we gapped lower, we opened, and then we went down from that level. Hmm. Excuse me. But whether or not that represents an extended, maybe like a 2 or 3 days or a week of downward movement, I don't really know. I think I've came into the market this morning bearish because of that little bit of a pullback as we move back down into the range. But what I've noticed, what I saw from my back testing is getting married to a bias, a particular direction, is a mistake. It's a mistake that I make on a regular basis, and I kind of documented some of that stuff as when I say documented some of that stuff, I'm just noticing how we took the London session out on what is that, Friday's London session or Thursdays? Last Thursday's London session, we just took out the low below that level. Then we just turned right up above it. That's kind of what this red line represents. I have breaker there, but it's not technically a breaker. It's not set up properly to represent a breaker. So I think I'm going to remove that because I was using it as a note holder to see note a note a note holder. Mic check. No. Note. Note. Note as a note holder. Um yeah, just to see whether or not that was a possibility. If I take a trade, if I don't take a trade, I think that's probably going to be yeah, that's going to be the thing that's yeah, yeah, yeah. I didn't even say anything. If I take a trade, if I don't take a trade, what I really wanted to do was go back to the video and the information that I learned over the weekend. It's been a crazy last couple of weeks because of my struggle with being profitable, my struggle with my entries, my struggle with doing all of the of follow my game plan, keeping my psychological um game strong. We just went back to square one, went back to zero. Started thinking about how sometimes the hard work that we as traders put in, we could turn right around and um, sabotage it by just being impulsive, um, by revenge trading, by breaking our strategy, by breaking our game plan, by swapping game plans, and we'll do all of these different things that throw us off of our game because there's a certain sense of drama, I want to say, that we expect, and there's an expectation of a struggle and drama, and you know it's just succeeding by um well, quickly. I think which is the thing that most traders have a problem with is that we will find a strategy, we find a little ICT, a little fair value gap, we hear the instructions, the idea that we would jump right into it, that we would pick it up, that we would just go move forward with our lives is not something that we are familiar with. We're familiar with being hard headed, right? We're familiar with bumping our head against the wall over and over and over because it's just something that we're uh, predisposed to do, not predestined, not really pre-programmed, but it's just something that we're predisposed to do. And it was something that we picked up, probably hanging out with some knucklehead kids who every time somebody told us to do the right thing, they were like, "No, I'm not going to." Right? This sort of rebellious spirit or whatever. But now we have to grow up. Right now we have to address those issues, and then we have to go ahead and just say, "Look, it's probably not going to be fun. Making the money probably won't be fun. Um, but for those of us who come from a regular American household, spending the money is something we have no idea about, right? Spending this type of money is something we know nothing about. So I'm assuming that's where we're going to have to find our fun, right? We're going to have to find our fun there. So, I'm vamping and I'm waiting for the market to rise into this range. We're rising into this range, and today is one of those rare days where I didn't check my audio to see if it was coming through. But I'm just gonna have to go. You know what YouTube should do for streamers? They should have an audio. They should have like a audio meter, so you don't have to guess whether or not the audio is coming through the system right. I mean, I'm sure there's like a massive series of pre-market checks you could run, but you know what I mean. So entering into today, mindset is everything that we need to deal with. So if the gap, the mindset, okay, mindset, that's what we're talking about. But we're going to pause that for 2 seconds to talk about price closes here. So whoa, whoa, price closes here on Friday, and we open here on Monday. I have the Asian session range here. Okay, 50% retracement is roughly 21,348. Roughly 21,348. 50% retracement, and that lines up exactly with this gap right here. This gap right here on the 15-minute lines up very, very nicely. Now, we could run this imbalance, we could turn it over, and we could move higher. But if I were to go ahead and enter this trade, I would create an order. It would be a sell. It would be limit. I would move my stop loss to there. Okay, all right, okay. I move my TP to here. Then we would see, well, that's an unbelievable range, right? Yeah, you're right. It is unbelievable. I couldn't survive that. So what I want to do is I said 21,348 is the 50% level. There it is. I think I would need to sell on the way down. That's what I would need to do. Sell on the way down. Okay, let's consider this. Let's consider this. You know, it's very important that we don't try to incorporate every part of ICT strategy, right? In our trading. I like that idea. I also find it interesting that if you're ever trading with an ICT strategy, I find it interesting that if you disregard any aspect of the strategy, that's the part of the strategy that's going to be in effect that day. And I think that that's the part that's crazy. But it does come from the experience of, um, it comes from the experience that you gain from the back testing and practicing with the strategy, right? I get that. I get that. It's just that. It's just that itself. And a lot of times we struggle with these things. 20,383. Where are we? 20,035, 20,383. Okay. It hasn't been quite been a 50% retracement. We're just shy of 50%. But I'm thinking about 20,366. And I'm looking at 20,366. So I'll go 20,365. Um, so what I targeted was a 50% retracement with a wick past 50%, which would just be roughly an eighth of the range, right? So it would be once we cross the 50% range, then I was looking to target the it's very difficult to describe verbally. So let's say this is a 50% retracement, right? And then we would start off looking at the market from here to where we closed on Friday. We closed on Friday here, here. Once we get to this level, this is a complete 50% retracement of that total range. My entry is above that because my anticipation or my idea is is that we would not stop in these upward candles when there are several gaps, right? There's a gap here and then there's a gap here. If we ran to the high of this up close candle, that would be decent. If we ran into 50% of this gap, that would put us here. If we ran to 50% of this gap, that would place us here, right? We haven't had any sort of pullbacks at this point. And I do not believe that we've had any 50% retracement on any gaps so far this year. Well, at least in that last couple of months. that every time we've had a 50% the opportunity for a 50% retracement on the gap, we did not do that. However, today we're running into which levels? What levels are here? Hmm. My stop loss is on the high of the Asian session from this morning's pre-market, from last night's trading. With that being said, I'm going to move the stop loss up, and I'm going to move the entry up to at least here to say that yeah, we could run to here. Now I haven't taken the trade. It's not a trade that I've taken. We have not taken the trade. Did I lose my positioning? I did. It happens. Create order. The limit. Sell. It's for too much. No, man, it's not. It's not. Where is it though? There it is. Stop loss. 30 narrow range, $500. It's like I'm asking. It's like I'm asking to be stopped out, right? All right, then we'll see. Like right there, that's fine. Let's pull forward another one of these agent session levels. Because again, this is what I was noticing over the weekend. And it kind of disturbed me, especially when all of these ranges are overlapping. When you have multiple London sessions and Asian sessions overlapping, that you would anticipate and expect trading directly into the high of the particular range that you're dealing with currently. However, we'll see sensitivity to prior lows and prior highs of the prior sessions. So I'm still hammering that one out. Still trying to wrap my head around it. Which one to prioritize on which time frame? Excuse me. Then also making sure to incorporate stuff like this. So I was on the 1 minute chart and kind of got distracted for just a split second. Keep hitting the wrong button. However, on the 5 minute chart, here's the imbalance on the 5 minute chart, right? So I'm saying to myself, could we run up just shy of this imbalance, not go into this imbalance and then move to the downside? Yes, we could. Could we run this imbalance, put a wick to the low of this up close candle? Yes, we could. The opening price for Sunday session is here. For Sunday is here. Still moving up. Time is 9:47 a.m. The macro is going to begin in about 3 minutes. If we see any type of reversal in this range, what would be the proper mindset, right? The proper mindset would probably be not to what? Front run it, right? Not to get ahead of it, but to let price develop as it should, then get involved. I think this would be the ideal location for an entry. Just above the pre-market, just above the Asian session high, right? So we hit the Asian session high. We just go above it just a little bit, and to run liquidity out up above that level, and then turn over and come back down into this area. Mm, 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 mm. We've made a more than a 50% retracement. Now we're coming directly into the area where I said that we would be. Let's say there's a 50% or 75% retracement. We cut that range in half. We are just shy of that right now. Inside of that 5 minute gap, we seem to be failing. And I put failing in quotes because we've been running this area in the last few weeks. Time is 9:49:41. We've been running this area in the last few weeks, just blasting right through it. So I'm not really eager to jump in front of a moving train today. It's just so much to it's so much to learn, so much to remember. It's hard to for me to make a specific rule, right? Just a rule that says never, never, never this, never, never, never this. And then you turn right back, you turn right around, and then you're looking at the exception like that same day or that same week. I mean, the market is completely different, so the rule doesn't apply in, the different market conditions. Let's see, 20,384.75, just above this level here, coming right up to it. And again, many people are expecting a pullback at this point. I'm not quite sure. I'm not quite sure. Not quite sure. And I think that's probably going to be the thing that's going to really help me out today is just keeping in mind that the back testing, the back testing outside of any sort of money making opportunities is really showing me that I really need to be um, mindful of my aggression towards entries, right? So if I backtested this weekend and my strategy kept leading me to the exact entry position, like over and over and over again, and I was really, really dialed in, then I would say, yeah, okay, great, great, great. But it opened my eyes to just more opportunities and more possibilities for entries. We never made that high. Never made that to the high of today's Asian session. We fell short of the high of the Asian session. Why would we not touch it? Why would we not touch the high of the Asian session? I mean, there's a gap here, but there's also a small gap above it and another one here and then one there. Why would we not touch the high of this session just just on GP, just like, we've come this close to that liquidity. Why not get there? I'm on the 5 minute chart, going to a lower time frame. Hmm. The hour closes in 7 minutes and 15 seconds. Everybody has a very, very interesting way. Oh, there's a long wick too to the right, to the left on the hourly chart. I would definitely wait for the new hour to open before I did anything. Yep, definitely. And just browsing through social media because I think one of the things that I really wanted to do was get my thoughts together about a lot of issues that traders face. And one of the things that I notice is that many of us as traders, we have this strange joke about our FOMO. We have jokes about our FOMO, and we have jokes about overtrading. We have jokes about the emotionalness of the way the market can take our stop loss and then go in the direction. And I think as a community across across all trading strategies, right? I'm not saying no traders are not a monolith, but across every type of trading philosophy, um, in our communities, we still have a high focus on the emotional aspect of trading. We have a high focus on it because I think that fundamentally that's where we all begin. And and then I guess the flip side of it is, the idea that we become this stoic, stone, um, um, golem, golem, whatever it is, of emotion that doesn't really feel anything towards our entries and our exits and the way our stop loss was run, or just that drive that says, I want to be better, right? That, and then the idea that traders have some sort of a we ran that Asian session low. You see how we ran that Asian session low, and we're testing it again. So the blue line to this blue line is Friday's Asian session low, and we just ran right inside of the discount of that Asian session area. And I would like to say to myself, oh yeah, that's the discount become premium. I want to say that, but I don't think that I can say that right now because we're just so close to just taking out the Asian session high from this morning. All right. And it just could be just a great opportunity to get up there and take out that Asian session high. So yeah, and so I think that as we as traders work toward self this sort of a self control and this self assessment when it comes to our psychology and our emotionality toward the entry mistakes or exit mistakes, or stopping out, or some sort of addiction to losing. That we also have are surrounded by the humor and the attention to that very thing. So if I tell you, hey, don't think about if I tell you don't think about a yellow zebra with purple stripes, right? The first thing that you think about, the first thing you imagine and bring to your attention is a yellow zebra with purple stripes, right? So it's like we commiserate in a way that sometimes isn't really even helpful. But at the same time, who wants to feel isolated and alone like they're the only one going through it, right? They're the only one feeling it. So it's just this weird. It's a weird human experience to be a part of the trading community, and I think that everybody uh, likes it, loves it, and hates it, right? One of the things that I find, and that's really really funny to me, is that profitable traders um, sometimes have to defend themselves against unprofitable traders, which makes it seem that there's odd dynamic where, a trader, has been traded for so many years, they've made so many hundred thousand, so many millions. And then the unprofitable traders who, as we are learning, we try to assert our confidence in our trading onto traders, right? Onto those people who are like out ahead of us. And so there's that same dynamic. But I think it's more so the dynamic of the student becoming the master, right? Like, young Padawan, take the pebble from my hand. And if you guys got that, how I mixed in Jedi with the Shaolin Temple, then you're a real one. But yeah, it's like young Padawan, can you take the pebble from my hand, right? And so we are all trying to ascend to a particular level where we can claim, knowledge or expertise. We have a slight bit of a consolidation right here in this range, especially on the 15-second chart. It's like going sideways. Let's go, and we're also coming into the end of the hour. And as we're coming into the end of the hour, we're watching to see where this price closed, to see whether or not we will break structure with this move up, whether or not we'll move higher. As of right now, it seems like we just made a return to this level, but we're just shy of that Asian session high from this morning, and I just don't have the stomach. I don't have the stomach to get in ahead of that level. And I'm not saying it's fear. I'm saying I don't think it would be wise. I think the probability of us attaching ourselves, or attempting to move to today's Asian session high and address it at least one time. We never did it in London. London ran to the consequent encroachment of the Asian session, then dropped back out below the lows. Now we're making a run for the high, and we're just shy of the prior highs. Right? What I mean by prior highs, I mean the Friday high. So yeah, getting into a short at this point, I think that would be too risky. It just doesn't seem like that would be an appropriate place. Where I have my entry place right now, I think is really cool. But if you could see, Oh. But if you can see, measure against the overall range of even a 1 minute candle of the 1 minute candles that we have today, it's ridiculous, right? Look, this is what we have as far as a 1 minute candle today. I'll just grab this and then I'll ba 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 da 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 da. So this is the range we have on our 1 minute candle today. Right? This is the range. But my stop loss isn't even that, right? It's easy. It's easy. Easy to it isn't even that range, that total 1 minute candle, right? So if I were to get short here, what's the probability that we wouldn't just make the range of one solid 1 minute candle, which is that? Now, what would I need to do? I would need to take all of that leverage off, right? 4 contracts. Ha 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 ha. Yeah, I need to take all of that leverage off, reduce down to something manageable. Click, click, click. Then I would say I was willing to risk $600, and I'll take the stop loss all the way up to that level, and then that's possible, right? That would be a possible better entry model than what I was looking for. Now that gives us what? That gives us the opportunity to look at where is the high of that prior up close candle, down close candle is there. Here's our entry here. And then we're anticipating a move back down this range if possible. What about getting long, Grady? You ever think of getting long? Really? Not really. Um, it doesn't seem like the market structure shift is saying that we should get long, right? It's not like the market structure shift is really saying that we should get long. That's the issue. Okay. New hourly candle. I am going to sell this. Quite a bit of risk up here. And there's that tiny little area that we had marked out with the 4 contracts, right? As if it would not run the high of this gap. We would have been triggered in at that point. Solid press all the way through. Running this high was not in my playbook. I never said it. So there's something I would have to add to the playbook later. Did I front run? I think I did. I think I did front run. I think I said that I wanted to see us come up above this level. And then as we begin to break down, that I wanted to get involved. But I think I front ran it anyway. Mm, it's a possible. I mean, it's possible we might. Okay, let's just wait and see what happens. Let's wait and see what happens. For some reason, the market paused for just a split second. Like the candle itself just paused for just a split second, and nothing happened as we came across the Asian session high. Mm. Now, I'm saying to myself again that my thought process is about the mental and the mindfulness of the trader, right? The mindset, the mental aspect of the trader. Um, and being aware. Okay. So as a risk manager, I should remove this. As a risk manager, someone who's going to should be managing the risk of the trade. I'm um, still mulling over a lot of the things that I believe that I should have or could have considered prior to entering the trade now. Is that what I should be thinking about? Or should I be monitoring levels, looking for, you know, anything else? Or am I watching just for the trade to play out according to the trading plan? There are a lot of different things to mull over right now, right? There are a lot of different things for the thought process to go, for the uh, it's a lot of different phases for the thought process to go through at these moments like this. Now, the idea that the price is hesitating at this point is not something that we're unfamiliar with, right? We call it the teasing, right? So the market goes up above a certain level, you take your entry, it just touches your entry multiple times, which is that Asian session high, right? So my entry is at the Asian session high. Now, when we passed the Asian session high and we turned over and we touched it once and we touched it twice and we did this, that's enough to make me begin to panic at this point, right? Everybody would panic because we would have to start documenting, we would have to start documenting, um, is this a bullish, right? Is this a bullish signal, right? Is this a bullish signal? And so we would have to start documenting stuff like this. Even if the answer turns out to be yes, then we would just not do anything to um um I don't know how to put that. I don't know how to put that. Because I already broke the rules, right? The broken rule, don't front run, right? And I front ran it. Had I not, then I would be able to watch and see as price ran high of that same prior Asian session hit that level. Right. This is Friday's Asian session high. We just ran liquidity on that. And today started out as a vertical straight line. Vertical straight line. Now, a lot of people were screaming bearish, bearish, bearish because of the Moody's or the S&P's down what is it called? It has to do with the credit downgrading of the U.S. credit, right? And so everybody was like, "Oh, okay, U.S. credit is downgraded. Market is going to go down on that news from over the weekend." But today we opened up and we had a nice what looks like a Judas swing as we took out the high on the 1 hour candle and we hit this area here. Uh, 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 uh. So I opened myself up to much more risk than I normally would on any one trade. But I think that one of the things that I was having issues and struggles with last week was my stop losses were extremely tight. My stop losses were like this, right? These were my stop losses just from this in this extremely narrow range, and I could never survive those types of stops, right? It, any price fluctuation, and I'm kind of upset that I removed this one because the length of this wick is almost double the length of this wick. It's almost like these two candles combined. So now the question is, how do I feel? Um, because we have to talk about how do we feel. We did all of the back testing the entire weekend. We did not expect to conquer the market in, an hour, 2 hour session, 3 hour session, off and on throughout the day of back testing, right? We knew that that wasn't going to be it. The back testing itself, um, was a psychological drain, right? It was just this being beat over the head over and over and over. But that's what we talked about in the video, right? We talked about how when we have negative self-talk, any outcome of a trade becomes proof of either we're a good trader or we're not a good trader, or it's meant for us, or it's not meant for us. Um, and so yeah, and so is this a bullish signal to run up above the Asian session level and then literally just test it 1, 2, 3 like that? Again, like I said, today we found out that it was. That was a very bullish signal. That we were using areas where we would sweep liquidity as areas of support. Now we've run this Asian session high. We turned over on top of it. Now we're going to watch this again. So we moved to it. We tapped it once. We moved up above it. We moved up above it. We tapped it again. Down close candle, high, return. This wick, body of the down close candle. We moved up. We dropped down. This down close candle. We moved up. Dropped right back in. Right back into the high of that Asian session. And it's 10:10 a.m. So the macro just ended. We were watching that macro begin 9:47, 9:48 around here, right? Then we gapped up. You had this small imbalance. We dropped into it, then we moved higher. We have this gap, which is unfilled. Then we moved higher. So this is what we're looking at. Drop down below Asian session high into this down close candle. We just popped up just a little bit. 10:10 a.m. Little thirsty. Hmm. Yeah, still watching this, just watching this level very closely to see whether or not we get any activity here. There's the London session area. I wonder if we would approach another. I wonder if we would approach the London high. Mm-hmm. 10, 12. Mm-hmm. Yeah, I like this. This here. So we're watching to see whether or not we drop down into this down close area. I really would like to see us drop into this zone here. We hit that Asian session high. We went up above it, traded above it, dropped down below it, traded back to it, dropped down from it. Maybe it was a Judas swing. What do you think? I know we just ran up above that level. We could come back and retest these wicks though. Gotta be careful here. Just want to watch and see this price go down below this up close candle on the 15-second chart. Mm, what do we think? We think a long-term consolidation before a breakdown? Or do we think we're just gonna impulsively rocket ship up to a gap, hit the gap on the hour, trade up above that level just for a little bit for 15 minutes, right? 1 15 minute to the upside. And then before that 15-minute closes, then it begins to descend back down through the ranges in order for it not to close above this up close candle or so. There's 18, 19 seconds, 16 seconds left on the 5 minute candle. We're in profit just a little bit that if we took to if we jumped out right now, it would be um taking a little bit off of our drawdown. But that's one of those other things that we talked about the other day. It's just, jumping in and out, scalping in and out, being reckless with our entries and exits, as a way to, put ourselves like that loss that I took here. The combination of this move down from this level and my own trading thought process, right, would serve to either put us into a trade that we could have possibly um, overlooked or missed, or it could keep us out of a trade that we could have been profitable on, right? So it's a monitoring, right? We're monitoring and we're measuring to make sure that whatever happens at this, what we're gonna do is we get stopped out here because we don't want to. We're gonna go ahead and probably just go ahead and shut the stream down, and are we gonna stop trading for the day, right? Or have we learned our lessons? We're not gonna overtrade, or are we gonna just hop right back in saying, "Doggone, had it," and then you know do more damage to our account than we've done? Um, I'll tell you what we are gonna do. We're going to flip a coin, guys. Yes, we're gonna start a poll. Starting today. I'm a man of my word. We're gonna see. We're going to see. We're not gonna see. We're not gonna see. I'm gonna tell you how I feel right now. And I don't know, and I'm gonna tell you how I feel right now. And I'm gonna tell you like this because I'm sitting here live on YouTube. I am Grady on the charts. I'm gonna tell you how I feel right now. I took two trades based on the data that I had from back testing this weekend. Both of them went against me. The market rocket ship to the upside and an unstoppable flurry right off the open. It really gave me no opportunity to get involved on the upside. I was looking at bearish order PD arrays, looking for an area for me to get short. When it came to the area that I was really looking for, which was the Asian session high from this morning and the Asian well from last night and the Asian session high from Friday, we came into both of those levels and both of those levels stopped us out. Um, I felt really disappointed. I felt disappointed because I wasn't really able to capitalize on the hard work that I put in, right? Um, Felt pretty bad because I recorded it and I posted it and I played with the mic because I recorded it and I posted it and I shared it publicly. Um, and um, we're supposed to get paid for our hard work, right? And that mentality is leading me to feel like that I did a day's work, and when I got ready to get paid, there was no paycheck for me. So what would we all do? What would any of us do in a situation like that? In a situation like that, what we would do is we would go off. We would go off, right? We would shake our fist, we would point our finger, and we would tell somebody what they could do with that type of behavior. And then if we didn't do that, there's another set of emotions that we would have to deal with, right? We would have to internalize that feeling. We would have to digest it and metabolize it in some way. We would feel that impulse. I need to turn the screen off because it looks like it's going my way all of a sudden. And I know that's not true. I need to turn it off. Looks like it's going my way now. We would have to internalize that. Traders have to internalize. We have to look at what we did, look at what we thought we saw, and we have to address the trader and not the chart. There's nothing I can do to this chart to punish it for whatever happened. I went back into this chart and I loaded up with contracts and it went my way. It doesn't care either way if I made money or lost money. It was going to go whatever direction that's going. So the only one would be punished if I went into the chart and added a bunch of contracts and made $50,000 right now. The only one who would be punished would be me because I would be reinforcing the response to my negative emotions for the market as appropriate behavior. And it's inappropriate. Having any response to this in this way is inappropriate, right? It is not what profitable traders do, not because they don't want to, because doing it is the thing that keeps people from being profitable. Hardest part of trading. Hardest part of trading, right? So that's it for today, guys. Thank you for checking in. I'm Grady on the charts, and we're going to shut this down for today. We're going to do some more back testing this evening and tonight, and then we're going to come back tomorrow, and then we're going to address the market with whatever it gives us. We're going to trade the same way. We'll probably take two trades. We're going to keep the risk down to about $300 per loss. I said it. All right. That's what the risk is, $300 per loss. And we're gonna trade like that. This is a great opportunity. This is a great opportunity to get in off the open to take um the how ICT called it the 930 gap, to take the 930 gap and to ride the 930 gap all the way to the upside. We did not do that. We wanted to see where we went to on the upside, and we wanted to see if we could have been a part of a decent move down into the abyss of gaps that sit below this move to the upside. Um, yeah, yeah. The only thing that we saw today was a small bit of a pullback that could have earned us about $200, maybe $225, and we did not take that to reduce our drawdown. So that's it for today. I'm Grady on the charts. You guys have a great week. Bye bye. $200 into a decent move down into the abyss of gaps that sit below this move to the upside. Um, yeah. So the only thing that we saw today was a small bit of a pullback that could have hurt us to about $200, maybe $225, and we did not take that to reduce our drawdown. So that's it for today. I'm Grady on the charts. You guys have a great week. Bye bye.
bystander. Every trade is a learning opportunity about the markets and myself. This puts a positive light on good and bad, right? I will take every day as it comes. I don't need to have crazy bias going into sessions. It's just I will take it as it comes, right? I had a really big winning day. Next day's scratch. I had a really big losing day. Next day's scratch. Every day's new.